Hey guys, today we're going to talk about lumber and pulp and paper, particularly Altri, which is a company that produces it. We're talking about its production costs. And the summary for today is that Altri produces mainly BHKP, which is bleached hardwood kraft pulp, and most of which is eucalyptus pulp. The second topic is that Altri's operational costs are around 500 euros per ton, which is a great thumb number to have if you want to check if Altri is about to turn a profit or to become profitable. And the last one is that its operational efficiency gains are getting more and more limited. And we will be looking at Altri and we will analyze its costs. Altri is BHKP and DWP, which is a dissolving wood pulp. So they produce pulp, two kinds of pulp, and they also produce energy from forest biomass cogeneration. BEKP means it's a type of BHKP, which is bleached eucalyptus kraft pulp, and that's the main thing that they produce. Its main use is tissue due to the softness of the fibers. Eucalyptus globulus is the main species that they plant and buy. It's a tree that they buy and produce in Portugal. It is desirable by pulp producers because it yields more than pulp than other pulps and other species. Altri mainly produces BEKP, which is a subtype of BHKP. There's an image in the written post at startpickinginsights.com. You'll see there from the Altri's 2020 10K that 58% of their sales is for tissue, pulp for tissue. You also have dissolving wood pulp, so the second type of pulp. It's a smaller type of pulp in terms of sales. You'll see that it's only 10% of sales, 9%. And it has several uses, with one of them being textile fibers. For example, Inditex, which we've been talking about in the latest weeks, uses wood-based fibers in some of its products. If I'm not mistaken, it's lyocell and ten fibra. But we have a few links in the written post for you to check it out. Navigator is a competitor of Altri in Portugal, and they don't make this kind of pulp, they're dissolving wood pulp. Now let's look at Altri's production costs. To arrive at the numbers that we will talk about, I took BHKP production outputs, so how much BHKP they produce, the cost of goods sold, and the operational expenses, which is sales minus EBIT. And you will see a very interesting chart in the written post. And we can see there that Altri counteracted cost of goods sold costs with operational efficiency. That's partially why its stock 11x in 16 years. So that means, in other words, that despite the cost of goods sold in euros per ton produced, those costs are getting higher, but their operational costs are not following that, and they have been able to maintain those operational costs over an astonishing amount of time, which in this case it's around 15 years. The counterpart of this is that the gap between cost of goods sold and operational costs on a per ton basis is closing if you take a look at the chart, and that means that there is not a lot more to squeeze in terms of operational efficiencies. They are selling a commodity, which is pulp, and this means that they have to stomach all the ups and downs of pulp's market prices, just like selling precious metal, for example. The red line in the chart on the return post shows us that there is a long-term upward tendency for pulp prices, yet it is a very volatile one. So that's why their profits are not so consistent. The bigger the gap between the red line and the operational costs, the bigger the profits, because it means that they they have more margin. It works just like a precious metals miner, and there is a that means that there is a break-even cost of production, and the commodity price variations will produce leveraged profits. And I've put a table to show what I was just referring to, which is if you take a company that has, for example, 550 euros per ton of operational costs of whatever, in this case maybe pulp. Um, and if you take two different scenarios where the BHKP price, which is the pulp price that they are selling, is at 600 euros per ton, and in the other scenario it goes to 660 euros per ton, you will see that EBIT per ton will, despite the BHKP price, which is the commodity that they are selling, goes up 10%, so from 600 to 660, the EBIT per ton doesn't follow that in terms of relative, on a relative basis, because the EBIT goes from 50, because their operational costs are 550, goes from 50 EBIT per ton to 110, and that's a 120% gain for a 10% upward price in the commodity that they are selling. So that's why we say that precious metal miners and commodity producers like this pulp producer, Altri, they have leveraged profits. Um, so to sum that part up, we can see that a 10% increase in commodity prices, in my example, produced a 120% profit increase. To sum it up, Altri has operational costs of around 500 euros per ton. An Altri shareholder is making an implicit bet on the underlying commodity, which is BHKP. The commodity price you bake into your valuation is your margin of safety, and as of today, 500 euros per ton it is the floor. So above that they make profits, below that they they are at a loss. We could have gone a step further and used EBT, which is earnings before tax or income before tax, because that includes interest. Um, I've put a green line in the chart for you to see the EBT and on a per ton basis. But EBIT gives us a more comparable operational picture though, because you can compare different kinds of companies, and that isn't a comparison problem there. So to end, I'll leave you with a few questions, a few action points. The first one is to ask, is the product that my companies make a commodity? And if you've seen the checklist posts that I've made, you'll see that this one is a question that I've added to my checklist. The second bullet point is what's the production cost of the commodity producers in my portfolio? And the last one is are the gains from operational efficiencies being exhausted, slowing slash eliminating future gains? That's it for today, guys. If you like the content, please share, and we'll see you next week.